Meta shares looking to extend their record winning streak as Meta leans into efficiency. The tech giant reportedly beginning another round of layoffs, according to Business Insider. However, Meta proving itself resilient in 2025. The stock is the only one of the Magnificent Seven to notch double-digit gains so far this year. Here with more on the company's upbeat run is RBC Capital Markets equity analyst Brad Erickson. Hey, Brad, it's good to see you. We've been trying to figure this one out, I must say, because, we had the hyperscalers out saying they're spending a lot on AI this year. Meta said the same thing. Investors seemed okay with that. What do you think has made it stand out to such a degree this year?
Yeah, there's kind of two things, I guess, that justify the move, even in light of the heavy spending, as you mentioned. One is that they are simply driving enough marginal revenue year over year to cover that cost for the moment. They just added $27 billion of revenue year over year, which is a shocking number. And so you can handle $3 or $4 or $5 billion of depreciation coming into the model with that kind of revenue growth. The second thing is, right now we're all talking about AI applications and what those can turn into. So a lot of this is kind of narrative. They have the best narrative, I would argue. And what I mean by that is, when you think about, what agents could provide, think of like a private, like fitness coach or something as an agent. Like there's real utility, I think, that people can kind of imagine on this platform. And I think people recognize like they're building the technology and they can provide that application within the business to drive more revenue. So I just think Mark's telling a really compelling story to investors and people are buying in, and that's what you're seeing in the stock.
So Brad, when you look at this recent run, then you look at it and say, as a financial analyst who's covered the company a long time, you look at it and say, it does make sense. It is justified.
Yeah, I mean, I think we can debate how frothy of a moment we're at from a consumer spending perspective or advertising perspective, right? We just had a change in administration. People were feeling fairly good about spending at the end of the year. Small and medium-sized business owners, which are the majority of Meta's customer base, they're feeling pretty optimistic about what they're seeing from the demand trends. So that's the kind of near-term blocking and tackling that gets it done fundamentally for this company. We can debate whether things are really good or just kind of good right now. But I think in general, yeah, the move is justified, what's going on right now.
And Brad, I'm curious too, you mentioned, of course, the change in administrations. There's been a commensurate change in Mark Zuckerberg, one could argue, as well. And to some degree in the company with the sort of stopping of fact-checking like the company had been doing before. From an investor perspective, is there anything that people should be watching for, I guess, either negative or positive effects of that term?
I think we can safely say this administration is certainly more pro-business. And so I think you're seeing a lot of these large companies and management teams play ball with that, obviously. I think, the fact-checking stuff I think it gets a lot made of it when the reality is they're just kind of changing the type of fact-checking that other platforms have used fairly successfully. So I don't read into that sort of too much. But, these guys run a very, very large platform that has, effects on society that are meaningful, and you'll see them continue to sort of be good stewards of that. But I think the fact that you've got this pro-business administration, it's putting them in a position to maybe be a little bit more offensive from how they run their business.